Good afternoon. How's everybody? Afternoon, Steve, Fletch, Crom, Virginia, Evil, Amy, Brian, Callum. How we doing? Happy Tuesday. Is it Tuesday? It's Tuesday. Yes. Think about that then. Where is everybody? Why is there only 18 people here? Everybody's vanished. Or is that glitch again? It doesn't seem right. Never mind. How are we all doing? So it's Tuesday afternoon. We're going to trade some indices at the open. Have a look at the FX pairs, see what's going on today. Aussie New Zealand is the main mover today, as you can see, because it's Aussie dollar basically today on the news. So we'll have a look at the news, have a look at what's happened overnight, and get prepared for the interest rates, which all start tomorrow. So just another quick note before we get going. For those that do trade the stock indices and FX, actually, it's a quadruple witching on Friday. So it's basically a quadruple options expiry day. So best way to can't spell calendar, but anyway. There we go. So this Friday, June the 21st, is the next quadruple witching. Basically, when you get these multiple expiries of multiple options, so it's stock futures contracts rolling over and ending, single stock options, there's loads of them basically, all sorts of stuff ending on the same day. So basically what happens is you get these massive volume spikes where everybody's getting out of positions. So 200, 300 ADR days, very, very common on triple witchings. Quadruple witchings don't come around very often, 4 a year, if that. Sometimes there isn't even 4 a year. So it'll be a big one. So be careful. If you've ever traded on a triple witching day, you know how big the moves can be and how fast. Yes, things like you've got on the chart there, 150 ADR. This is peanuts compared to what you will get on Friday, potentially. Crying out loud! Why is my pen not working? So you get big moves. So just be aware of that. Friday. Sometimes we get movement on the day before as well, so people jump the gun early. But basic rule of thumb on a triple witching or quadruple witching day is when the market opens and it takes off, you just go the way the market's going and you do not stop all day, because it doesn't stop all day. So if you go and look up, you can do a search for triple witching dates, futures dates. It's the triples which are normal. Oh, there you go. That's a good calendar. It's probably you find one that goes back further as well. So 21st there. So it's kind of the same. So there's must be triples, the green ones, I guess. Are they? Oh, no, triple witchings are the dark ones. So, but it's actually a quadruple on the 21st, not a triple. So, yeah, just be aware of that. Friday, it'll be a big day. It's the sort of day you don't really want to. Saying that, you don't want to trade the opening range breakout or stock index hedge strategies. But if it goes at the open and it doesn't stop that direction, you do want to be on it, and you do not want to set short targets. Huge targets, basically. Yeah, 5R, screw it. 20R, big moves. But you get it the wrong way and you try and mean revert it all day, you will die. So just don't go with the flow. Afternoon, AZ, Monkey, Mark, Brian, Forex, yep, X4, even smash the like button, please, everybody. Hit the thumb. Oh my God, John's gone massive. Afternoon, David. Right, so today we got 7 minutes to the open. Aussie, New Zealand, we've got a few ADRs today, so we'll have a look through those in a sec. I'm just going to start off with the news. Overnight, we had quite a lot of Bank of Japan talk from Ueda and Suzuki and Kazuo. Ueda. What? Oh, that's his first name. I've never seen his first name before. It's just Ueda. But yeah, so basically, loads of talk coming out of there. Nothing really useful. Ever such a slight, we're watching FX moves, but not dramatic. So nothing big from Japan. We had the Australian rates come out as expected, 4.35. So that was today's main news, was the interest rate this morning. 4.35 is exactly what we got. Now, the statement and the press conference, we had again, and this happened in the New Zealand one, and it also happened in, where are we? July, April, maybe, May time, something. The Bank of Australia said that there is a chance that they will increase interest rates one more time, same as the New Zealanders have. So the Aussie, again, confirmed more bullish, New Zealand bullish against all other currencies. So unlikely to be a smooth return to CPI. Basically, there is a possibility, although I think it's fairly small, of the Royal Bank of Australia increasing those interest rates one more time. So we will see. But as you can see, obviously, the market said, yep, okay, we believe you for a short period of time. The Swiss franc's gone mental today. That's why that's done that. But as you can see, the Aussie is rallying today a little bit, but not dramatically. So although there is a chance of an interest rate rise, not convinced it's going to happen. So the market doesn't seem to have done an awful lot if you look through the Aussie pairs. Aussie New Zealand is the one that has done the main movement today. We've also had this afternoon the core retail sales for the US dollar. They came out lower than expected. So that was at 1:30. So that was about an hour ago. So if you look at the US, we've got bearish movement on the US dollar at the moment because those numbers are negative, but not dramatically negative. So whether you can see by the euro US dollar here, that's it. So, compared to where we go with ADR, it's not really any impact whatsoever. So very little impact off of that today. And we've had the industrial production numbers come out, which was slightly positive. So that's it for news today. There is no more news. We had the Eurozone CPI came out as forecast. The Eurozone CPI isn't something we would pay much attention to because it's made up mainly of France and Germany. We already have those CPI figures, so you already know what this is going to be. So this very rarely doesn't hit forecast. So that's no news. Apart from that, that's it. So there's your retail sales and obviously the negative impact on the US on that. But I don't think that will hold, really. So we'll probably undo that. So that's it for news. No more today. So tomorrow we've got our first main interest. Is it a bank holiday tomorrow in the US? What's that? Is that Martin Luther King Day or something? Oh, Juneteenth. What? What's Juneteenth? I don't even know what that is. What's Juneteenth? National Independence Day. Okay. Happy Juneteenth tomorrow, everybody in America. So it's a bank holiday in America tomorrow. So US indices not worth trading. We've got the GDP tomorrow evening, but the main thing tomorrow is that pound rate, 3 minutes to the open. So that's the biggie tomorrow. We're looking for that CPI number. If it comes out as a 2 or a 1.9 or anything less than 1.9, very, very unlikely. But if we got a 1.9, for example, there is a good chance that Bailey might turn around tomorrow and go, actually, we'll come down, we'll drop it. Or at least we'll get the votes towards that, in which case it pretty much nails guaranteed July. So either way, this is a very, very important figure tomorrow because this is going to tell us what they are going to do with interest rates or potentially do with interest rates within the next 4 to 6 weeks. So whatever that number is, will possibly have a big impact tomorrow. If it comes out as forecast, it may be that the market is right. Okay, let's wait for Bailey. If it comes out higher than forecast, I think the market will probably still want to wait for Bailey. If it comes out lower than forecast, though, I think they'll dump it. So we'll see. That's 7 o'clock tomorrow morning. I'm streaming at 8 tomorrow, so we'll have a look at that in the morning. And then we're obviously on to interest rates on Thursday. Right, let's just watch the open. So we'll see where we go at the open today. 1 minute to go. So quick look at the ADRs today. Swiss yen's just hit 125 ADR as well. So big moves on that Swiss franc today. So again, remember I said Swiss franc is a safe haven currency. In times of uncertainty, what's going on with interest rates and things, we tend to get runs into the Swissy. So I think this is probably just the market scaling out of some positions ready for tomorrow's CPI number ahead of the interest rate changes. And we've also got the Swiss interest rate change happening on Thursday morning. So this power in the Swissy, I suspect, is them entering into the Swiss franc in anticipation of no change. So this is probably just a precursor to what's going on. It'll probably all undo itself within the next couple of days, assuming they don't do anything with interest rates. But Aussie New Zealand obviously is your main one today. So nice mean reversion opportunity, Aussie New Zealand. You've already had a reversal alert on that this morning. I know you haven't. What? You sort of have. Oh, that's really screwed it, isn't it? We had a big gap down situation there on that candle. That was 1:30, I guess. That was the US news, wasn't it? Yeah, that was on the new. That was the US retail. Screwed up Aussie New Zealand somehow. But yeah, so it's kind of just hovering around that 150 level. Good chance of a mean reversion on that one today. That would have been your reversal alert, but obviously, God, what weird price action that is. Look, it's gapped down and exact double topped. So the indicator's gone completely haywire because it hasn't had an open above, close below situation. And we've put in a double top. So it thinks now we want to go long. Never seen that before. That's a completely weird, bizarre fluke of events all happening in one candlestick. Anyway, so that's a massive extension to the upside. So there's a good mean reversion opportunity there to go short and pull back into one of these propulsion gaps, or potentially come and retest the high of yesterday as potential support. We are bullish Aussie now, though, so be aware of that. Right, open. Long on the Dow, long on the S&P. NASDAQ, very tight range on the NASDAQ. No trades on the NAS today because it's really, really, really tight down there. Can't quite see the NASDAQ, can you? But yeah, really, really tight range today. So want it a little bit wider. So probably take a 5-minute opening range break on that. I can hear some ADRs going off. Euro Swiss and US Swiss. Again, more Swiss franc movement. We'll have a look at that in a sec. All these other ones. Just watch the open. Thank you, Euro New Zealand, for that 1% profit. Very nice. Need pound CAD to give me a move to propulsion. Yep. That's my plan. I mean, the pound CAD's still short. I'm out of most of that pound CAD now, but I've still got some. Hasn't gone anywhere today. So got out of the aggressive entry and did DD control and pretty much at break even on it. I'm looking for a push down into the lows at the moment. But it's all, the market's not really going to want to do much with the pound today ahead of CPI tomorrow. So that CPI number I could really do with a 1.9 will be down there easy. All right. If we get it. Okay, so long S&P. I need to watch this wick. don't think that is actually high of the session, is it? No, it's not. So high of the session is a little bit up from that. So that's your pre-market high, which is just above there, which is just where my TP1 is today. Okay, 1 minute to go till the 5 minute opening range is in. NASDAQ, quite whippy at the open, no movement. Dow's trying to go long with the S&P, but not really a lot of movement on that either. Good morning on the other indices if you've traded them. So FTSE was a nice clean break up today. So nice clean break up for 1 hour today, and then it broke down and gone nowhere. So if you didn't take a quick scalp, which I'm doing at the moment, still taking quick scalps at the moment on this market, that worked nicely this morning. So did the DAX. Although the DAX hedged. I got out of the hedge though. Nice flush on the DAX today. Okay, S&P is coming up to pre-market highs. We've closed out the pre-market high. See if we pop it. Yeah, we're through the pre-market high, so we should get a run out the highs today. Target hit on the S&P. Break even on the second half. See if we can get a run up. So yesterday we had a big run on the S&P. Big, strong steps up on this at the moment. Very strong stocks at the minute for the last week. Probably coming into this triple witching. So if we get to Friday and this thing's still rallying, I reckon Friday you'll have undone at least half of that. You'll have a big old down day on Friday, I think. But we'll see. It's got to still keep rallying first. Dow's out the highs, NASDAQ long as well. There's no volume in the NASDAQ at all today. It's just dead. Okay, Dow's gone long. So this area is quite key on the Dow. It's yesterday's high and the pre-market high of the day. So that's where that was our high yesterday. We tapped straight into the high in the Globex session and dropped today. We're just attacking that level again. So if we break through that today on this session open, we should get a pop. So potential ADR on the cards today. If we can get through this and hold this level. NASDAQ's really stalling out. There's no bull volume on the NASDAQ at all at the moment. Dow seems to be struggling as well a little bit. But S&P's off. So we should get a rally today, I think. Come back to that in a sec. We'll have a look at the FX pairs. So Aussie New Zealand weekly range also hit on that now. So there's your weekly. That's your first hit of the week. It's only Tuesday. And as you can see, we've already done the weekly range. However, I take that with a little bit of a pinch of salt because that is a gap down on the broker of just under half an ADR. So really, it needs a little bit more to be a true weekly range hit because of that gap that we've got. But yes, obviously it's rallying heavily at the moment. So this is obviously off of the back of the Aussie dollar. Not changing its interest rates down and saying potentially it could go up higher. We've also got the CAD Swiss. So all the Swiss pairs today, big, strong rallies. So CAD Swiss, 125 ADR. That's pushing down hard. Swiss yen, way up at 125 ADR. Again, yen dead on its feet at the moment. Euro Swiss, again, ADR hit to the downside. So lovely propulsion gap targets on the upside on that. But obviously it is bearish, the euro now, because interest rates have come down. So much rather take shorts at ADR highs, RSI highs than start to take longs. Pound Swiss, same scenario really. I'd much rather be hitting the short button, especially with that CPI number coming out and forecast to be dropping tomorrow. That's going to weaken the pound, and obviously if they weaken the pound on CPI, they'll drop the interest rates, which will weaken the pound further. So all these mean reversion opportunities are slightly risky. New Zealand Swiss. So New Zealand is the bullish at the moment. So this is potentially a nice looking long opportunity. We're at ADR today. So look, drop down M5, wait for some reversals. See if you can get a reversal, some bull action basically, just to sort of do a mean reversion play on that one, and US dollar Swiss as well. So US dollar, again, very neutral at the moment. No idea which way that's going long term. Neither does the Fed. So as long as they are neutral, it will be pushed around by whatever currency is rallying, and that happens to be the Swiss. So that's an opposite. You can mean revert that. US dollar will rally and drop based on its news. Obviously, we've had negative news today on the US dollar with the retail sales figures, and the Swiss is obviously rallying off the back of that. But likelihood is they're probably converting that US into Swiss, basically. You want it somewhere safe, basically, when interest rate changes are coming up. Now, the Swiss obviously has got its interest rate change on Thursday, so you could find this all piled out of tomorrow. So we'll wait and see what happens with it. But there's no other news, no other reason why this will be rallying today. Dow, target hit to the upside, break even on the second half. So 2 clean breaks today. Nice clean break, nice clean break. NASDAQ, stuck fast. NASDAQ is an inside bar. No, it's not an inside bar. That's a lie. There's your 5-minute opening range. So we have popped our head outside the opening range, but we've closed back inside the 5-minute opening range. No idea where that one's going today at the moment. We didn't even test that propulsion candle off the news either. So just no bulls in the market on the NASDAQ today, whereas the other two are flying. Right. Come back to that in a sec. So those are your ADRs today. So there's lots of opportunities, but they're all Swiss franc. So nothing that I'm interested in at all today, because I'm not trading the Swissy at the minute or the yen. These yen pairs, obviously, at the minute, the US yen has broken out this, obviously, last week on above the previous second intervention level. We tapped up above it today, but it obviously got rejected off the back of that news. So it did look like the US dollar was trying to put in another rally before that news held it back. So I get the feeling that this could well rally. You can see the wicks going in here. Look. It's not that bearish. They look like they want to run again. New Zealand dollar yen, not gone anywhere today. Pound yen, not gone. That's not going to go anywhere because of the interest rates. Euro, bearish, still managing to make ground against the yen. So, and the Swiss obviously is rallying like crazy, and the yen is dropping. So all these yen pairs, again, still not able to get any traction at all. Aussie dollar yen up at all-time highs again. You know, it's only needs an ADR really today to hit that and take that out, and obviously that can run as well. New Zealand dollar yen, as we know, has already done it. So still not convinced about this Japanese yen and getting any strength or any second intervention moves in it. And the Bank of Japan are just not saying anything. Haven't changed rates, not saying anything about rates, just nothing. All the stuff that was said this morning was useless. They're not rallying it. They're not dumping it. They're not doing anything. They're just sitting there taking the hits. So all they keep talking about is cutting bond purchases, but they don't talk about how they're going to now make money without the bond purchases. Yeah. So it's just impossible to tell what's going on with this thing as well. And you see by the market, you know, the market's got no clue either. So your whole being wants to short it, but carry trade is long. And it's a trender, you know, it is a trender. It always is a trender long. Always has been. But what do you do with it now, eh? Don't know. So still steering clear of that one. All the yens at the minute. ADRs we've done. RSIs. There's loads of RSIs to look at. Oh, come on, NASDAQ. NASDAQ's trying to break out the opening range lows. And everything else is 2R. Make your mind up. Be nice to get 3 clean breaks today, but it looks like I'm going to get hedged on the NASDAQ. So a lot of bears coming in now, look. Wow. See if this is a profit take or it's going to reverse. Jittery today, isn't it? Afternoon, George. Afternoon, Dev. Swiss yen is in uncharted territory, and I'm heavily short on it. Eek. I mean, this has been trending now since October 2020. Not stopping. So, yeah. I've just finished all my back testing for my friend today. Finally got through all of it, all the tests I wanted to do, basically. Just to finalize all the data and everything. And nothing works on the Swiss, on the yen. It's a trend. It's a trend instrument. The mean reversion does say that's a lie, actually. It does work in the fact that it doesn't lose loads of money. Yeah. And this is the RSI2 strategy that I'm talking about. But it doesn't really make any money either. So he's decided to remove the yen from the portfolio completely. Not just based on what it's doing at the moment, but the last 10 years back testing. So we've done 2 out of sample tests on the original test. So the original test data, then 2 out of sample tests. None of them actually make long-term profit on the yen. So his trend strategy that he uses, fantastic on the yen specifically. Yeah, so it's true what they say. You know, when I talk about, and I say every now and again, like instruments having their own personalities, and therefore suiting specific strategies. The yen is a trend instrument, so needs to be treated like that with a stop loss, really. But I was saying that my strategy works on it. Stop loss based strategies don't work on it, is what I should say, really, isn't it? Unless they're trend strategies. Yeah, I don't know what to say about the Swiss yen. It's just off the charts, isn't it? It's crazy. Look at the days up, though. Look, I mean, and it's expanding as well. Look, you see the size of the bodies on the candlesticks. They're getting bigger and bigger and bigger. Yeah, it's expanding volume, expanding weakness. And after these expansions, literally, you're just getting either small flags or ranges, aren't you? That's the intervention, second intervention. But look at what happens before an intervention. Yeah, you get a range expansion, then an intervention. You never know. Could be the time for that. Although Ada's keeping a very, very tight lip, isn't he? Great. Hedged on the NASDAQ. Well, there's a way to ruin the day. So hedged on the NAS. Just about. Look at that for a hedge. Look. There's my entry. Bottom of the wick. There's my entry. Top of the wick. Literally just got my orders. That's it. It's doing nothing else. We'll wait and see what happens with the NAS. Everything's starting to unravel. So we'll see if these propulsion moves hold. So they should add, if they're going to take it long today, they should add into these moves. If they've run out of steam, we'll obviously just come back into the opening range. So see where we go. Right, RSIs. AI is back on the board. That's a good one. Oh, that's not working. Friday the 21st. You've been warned. God, John's gone grey, look. Powell's getting old. Nice hats, yes. They look like they're in a oldie English pub. Triple witching, you've been warned. It's a quadruple. That's only 2 witches. You need Powell, John Wick, and Bailey for a triple witching. Not quite sure what it would make a Bailey. And Lagarde, yes. There we go. John Wick, Powell, Lagarde, and Bailey. Quadruple witching. Okay, Brian, off you go. Your job. Right. RSIs. Aussie dollar, New Zealand dollar, obviously, is RSIs across the board. So with 4-hour RSI extended, we're above the 70 level now. So very high probability of a mean reversion pullback on that. Hourly, we are also extended above the 80 level. So that's a really good entry point on Aussie New Zealand. But obviously, this is off the back of a news event. So order lines on it. So this is basically a really good mean reversion opportunity back down into this double top. So if we are going to break out, you often will retest the breakout. If you're going to go into a trend, obviously if it's a mean reversion, it will just come straight back into the range. So so good opportunities on those on H4 and on H1 there. You're just coming up to a weekly high as well. So we got kind of a triple top weekly high, which is just coming up to at 175 ADR. So if it gets to 175 ADR and you see signs of sellers entering the market, yeah, reversal alert to the downside, which will be at the moment there. Push up into this level here, which is that weekly high, and then reversal alert showing signs of weakness. You've got a monthly level coming up as well. So very good area of resistance coming up at 175 ADR on Aussie New Zealand. CAD Swiss, obviously selling off like a crazy thing. So that's RSI extension to the downside on the 4-hour and the hourly. That's a long way away from the 72.24 at the moment. It's hard for the market to push too far away from that 24 moving average, which is the monthly. Yeah. So when you get a really decent distance away from that, you will usually get a ping back from it because the market just runs out of people wanting to buy. Yeah. There's only so many times you can get run over before you go, nah, I'm going to flip your way. And then as you flip that way, there's no more buyers left. So the market just has to stagnate or more likely pull back and profit take. So it's a really good opportunity on the CAD Swiss, although the CAD is bearish at the moment, as we know, because obviously the interest rates have come down. Swiss yen, we've covered this one. I mean, that H4 RSI extension is now above 80. Yeah, so I talk about the 80-20 on the 4-hour a lot. It's not often you get up to these sorts of levels without getting a pullback. That one doesn't really count because it was before the intervention. So you normally get a very nice pullback of some description. Can't see it there, but when you get to that 80-20 level, and same with the 20 to the downside. So you don't get out of it often. You're looking at year and a bit there, 3 or 4 signals a year on the 80-20. 4-hour just shows it's incredibly extended. Yeah, so it's just exhaustion. You know, all the RSI is telling you at these levels is the market has been pushing hard for such a long time, it's unlikely it's going to be able to sustain it because there just will not be any sellers left. So if you even if you want to take it long, you need someone to sell it to you. If there's no one to sell it to you, you have no choice but to take profit on the leg you've made. So that's why we get the pullbacks. Elastic band theory. US dollar Swiss 125. So yeah, that's very, very nicely extended at the moment. However, this is the yen. So you're taking a big risk on these yens at the minute because they have proven many times now they have no way of driving it. So they're stuck in a spiral of death at the moment. Euro Swiss, obviously euro interest rates coming down. So as you can see, this is getting pretty embedded down here. Again, Swiss franc on a massive rally. If you're unsure what to do with any other currency, stick it in the Swiss. Swiss has been doing that for a couple of weeks now. We've got a big run going on at the moment, again this week. So Euro Swiss extended on the hourly and the 4 hourly. All these, I'm not taking any of these literally at all. These are all the currencies that I'm not trading at the moment for the reason that they are highly likely to squeeze. So just be careful if you take these because there's a good chance you might get squeezed on them. If you are going to, I mean, there's someone in Telegram as well has been saying, with these pairs, still trade them, but trade them with half the risk and assume to be in them for twice as long, or only trade them with absolute extreme levels. So like 150, 175 ADR reversals instead of 100s, 125s, 80-20 levels, 90-10s on the hourlies you very, very rarely get. But if you do get a 90-10 on the hourly, it works 100% of the time. You just don't get them very often. So, but the 80-20s, yeah, and scalp them. Yeah, just get out quick on these moves. Yeah, break even fast. Just don't position trading on these at the moment is just a little bit risky. Pound Swiss also extended hourly and 4 hourly. You're down below the 20 level again there on the Pound Swiss. H4, you're down below the 20 level as well. But again, we're just seeing a lot of flags at the minute or accumulations. And obviously anything you take on the pound at the moment, very risky. That CPI number drops tomorrow morning. You can kiss that goodbye. And if they then decide to drop rates, you can kiss it goodbye for weeks. Yeah. So long in this, dangerous. New Zealand CAD, obviously it can go completely the other way. Yeah. The interest rates may not get to 2%. They may freeze at 2.3, in which case the market's going to go, holy crap, there's no way he's dropping interest rates. That'll go bullish. And then Bailey will come out and say, we thought this might happen. We definitely can't do the rates at the moment, probably now August, and then it will go bullish. Yeah. So again, it can change 48 hours. We've got two massive news events on the pound. Absolutely no idea which way they'll go. New Zealand dollar CAD, we've got a nice bounce coming off at the moment on the 24. That is also that weekly low. Nice rejection there on the 4 hour. So good rejection wicks at the lows. Yeah. So limit orders triggered. Had another rally triggered. So you've got a 3-bar reversal going in now. Pull, pause, push. I'm long on that one at the moment. Just looking for pushes back up. Hourly. There's your entry from yesterday. There was an entry there as well on Friday. So that was my first entry. Second entry was this morning. I'm talking about yesterday. There was an entry yesterday if you missed Fridays. But either way, average is there. So I'm now looking for could well get up there, but I'm not going to be that greedy. So I'm just going to go for that propulsion there. So just roughly a 50% retracement, just under on that down leg. However, it is bullish at the moment. So this is the deepest pullback we've had. So this is the first time we've double bottomed. Look. We've been making new highs constantly. This is the first time we've actually double bottomed, which is signs of obviously the market getting a bit exhausted. So there's a good chance that we might put in a lower high now. And then market structure shift bearish. So that's the reversal that would be your peak formation height. New Zealand dollar CAD. So that is one that I am in. New Zealand dollar Swiss, again, exactly the same as the Swiss yen at the minute, massively extended. So on the 4 hour, you had a 20 there, look, and it literally just rolled over completely. So again, that's what you'd be looking for. So if you measure these moves when you get these little pullbacks and these little flags, you're looking at maximum of an ADR, no more than that, because it is literally wanting to just collapse. So if you're getting into anything here, just, you know, look for wherever that low forms. If you got into something here, for example, so if you got a reversal alert there, and then it just pulled down and invalidated that, and it pushes down to there or something, and then it pushes up, measure an ADR from that low. And even if your entry's there, you're only going to get half an ADR profit out of it, because the maximum you'll get out of it might be an ADR. So just be careful if you are going to get into these. They are all extended. There is a good chance they'll pull back, and there's a good chance at some point they're just going to start to correct that move because they're going to want to take profit on it. So big, nice extension on that one. 4 hour below the 20 as well. Again, yeah, you're going to get some kind of pop on it, some kind of profit take, but it might just be a little flag break continuation rather than a pullback. So, but you will at some point get, you know, that good 38% retracement. So at the moment, you'd be looking possibly somewhere in that propulsion gap. But it's gone bearish now. US dollar Swiss hourly RSI. So all the RSIs have just changed. Not a lot though. It's all the same stuff. US dollar Swiss is the one I didn't get to. That on the 4 hour is below the 30 again, and on the hourly now below 20. So big extension on that. So yeah, got a lot of potential support here. Look, this whole area here. It's these weekly low lines, basically. This is why this indicator has these lines on, yeah? This black line here and this black line there. Yeah, it's support for the week. And it happens again. It holds it. This is why support and resistance works. It's levels where the markets either exhaust or do not want to trade below for any financial reason. They get held at those levels. Yeah. So when you break through these levels, the market comes back and retests them. The guys that flipped short here that were trying to long because they couldn't go long, they exit, flip short, go with the crowd. And then when you get back to it, they add to their shorts. Yeah. So this is why support and resistance works in the way that it works. Why these lines are on the charts, because weekly levels are what the market trades. So there you go. So there's a nice extension long opportunity there as well. Can't get out of anything at the moment. Why is that reset again? Some weird glitch where I don't know what it is. Every now and again, this resets to 1970. So there's obviously something going, because all this does is it reads the account history. So there's obviously something that happens in the account history. It must be connection issue or something. It's easy fix. You just switch time frame and it resets itself. But no idea what it is. Aussie dollar CAD. ADR. So that's hit ADR now as well. This weakness on the US dollar will be weakening that Canadian. And obviously we've also got the Australian dollar move. So that previous monthly level there, 125 ADR, potentially it's a 50% retracement. It's a propulsion move, which was a break of that low. It's also a previous monthly level. Lots of divergence, lots of convergence of signals there. Right, I'm out of the S&P. I'm out of the Dow. So these two pay for that, and I made money on the DAX and the FTSE. So overall profitable day again. But going to take a loss of 0.67 on the NASDAQ. Up 5.6 on the day, though, so I don't care. But on the NASDAQ, downside target for getting out of the hedge, at the moment I've got bang in the middle of that move, which is a really stupid place to put a TP. So I'm going to move my downside TP down to ADR. So if we do not hit ADR to the downside today, I will just lock in the loss on the hedge. Upside, obviously, we are all-time highs pretty much, aren't we? We are all-time highs. So upside, it can go wherever the hell it likes. So what did we get yesterday? 366. So that was 150 ADR. Previous was 230. That's ADR. 3/4 of an ADR. 1.5 ADR. So I'm going to go ADR basically on upside and downside. So if we just sit around and rotate all day today, I'll just lock that hedge in and take the hedge loss. If it manages to get to an ADR, then obviously I will try and do a hedge exit. It's a shame. That's ruined the day, that one. Well, it hasn't ruined the day, but it's ruined the US sesh. Never mind. Afternoon, Chucks. Is that a gap in US dollar CAD 15-minute? It is. So that's the news. That'll be 130 candle. So that will be 115. So that is the start of the 130 candle, which was when the retail sales figures were announced. So obviously no liquidity. They just massive sell orders came in on the negative numbers. There were no buyers available to execute, so they got slipped. So good chance. I mean, these retail numbers, if you look at them, they're not catastrophic by any means. They're just what we had last time. Look, we were on a 0.1 negative and a 0.2 negative. We got pretty much the same. We were hoping it was going to go up, and it didn't. But at the end of the day, it's retail. The market shouldn't be shocked by retail figures dropping. It's a cost of living crisis. Inflation's bounced. You know, there's no reason for retail to be hugely strong, is there? If you look at the numbers, yeah. The inflation numbers at 3.3, it's dropped ever so slightly. We bounced last quarter. It's just there's no reason for retail to be strong. So I wouldn't expect this to hold. This, I'd probably be able to get a gap fill out of it. Watch this. If we can get down and test the low of the day, you probably find that's where they bought it during the Globex or during Asia. That's probably where we'll get a little buyout, but it might just go straight up and fill that gap. But that's you can't really. I mean that's more coincidental that that's bounced out of there because that's just part of a news V-shaped recovery. So most likely in the move or test that and come down. It's bearish. It's bearish if you're trading the last 3 days. It's a symmetrical triangle if you're trading the last week. And it's bullish if you're looking at the last fortnight. One chart, one time frame, 3 zooms, 3 completely different reads on the market. This is why trading is so hard. Every person looks at it in a different way, and this is why the market goes up and down. Giving you 3 different scenarios, all valid on the same time frame on the same instrument. Go pick one. Afternoon, Mumo. Right, so that's all I got for you on FX today, unless there's anything specific anyone wants to look at. It's a bit of a holding pattern day today. Obviously, we're waiting for this CPI number tomorrow so that we know what to do with the pound. It's a bank holiday as well, which is a little bit worrying because if we get a big move on that, we're going to get a lot of slippage in the afternoon because there won't be any US liquidity about. So might be an interesting day tomorrow. New Zealand GDP figures are out quarter on quarter. They were down in recession land. If that doesn't come out as a positive, not going to be good for the New Zealanders because it shows that they're going into recession. However, from a fundamental perspective, if you do get another negative, they have already said that there's a chance they're going to increase their interest rates. If GDP drops for the second time running, they will want to get that CPI number under control a lot faster, which is bullish. So that coming out as a negative would read as a red number. Fundamentally, it quite possibly could rally that New Zealand dollar, which is why you get everybody going, why is it negative and gone up? Because there's more at play. You see the forums for new traders, they don't understand how the economics work. And it's possible that we're going to get an interest rate rise on that Aussie and New Zealand, which was confirmed this morning. So got that tomorrow evening as well. But Thursday's the big day. Interest rates, double interest rate day, and unemployment for the US. So it will be a big one. Pound odd has just hit ADR. Good movement today. Again, Australian dollar not stopping. So this is all Australian dollar rallying during the US session. Obviously, rallying off the back of the interest rate and the announcement of potentially higher interest rates. Can you review the trades of your RSI2 strategy? What you mean on the FTMO account? Yeah, so I got a loss today. That's probably Swiss. Probably US Swiss, actually. Yeah. So, again, like I was just saying about the Swiss franc, yeah, I've been long in the Swissy. I've got triple exposure on the Swiss. That one's gone. But hey, fun money. It's FTMO. It's not real. I'm trading the Swiss. If it was my money, I wouldn't be in the Swiss. And that's why. So yeah, that was an RSI to see this. I'm looking at the 4-hour chart here. Yeah, you're saying, why did you long there and not short there? Yeah, so it's an RSI2 upside, which would be a short normally. If you look at the daily chart, it is an RSI2 long. Difference between two time frames. Again, same instrument, same indicator, RSI2, same strategy. On the daily, it told you to go long. On the 4-hour, it told you to go short. Random. So yeah, loss on that one today. But 2.5% up. Obviously, this is not a full month. I've only been trading it for a week and a bit. So and I've got exposure on the CAD Swiss as well. A little bit more room left on it. But I'm hoping the Swissy will move tomorrow when we get the CPI numbers. So if you can just stay in the game long enough to get the news, there's a good chance that'll all undo itself very easily. Aussie New Zealand is actually a good entry. Look, might take one on that. Short, yeah, it's a nice short look. Triple top. Oh, dare I short the Swiss yen? Did back there, look, see? Not gonna bother. Pound Swiss is an entry on that as well. Long. Again, dangerous trade. Oh, this is pound Swiss. No, sorry, scrap that. Got 2 Swiss exposures on already. I'm not going long on the Swiss again. New Zealand Swiss as well. I'm not going long on that one. I'm already long on that one, sorry. So yeah, I'm not going to get in that one. Pound Swiss. So hopefully those will pay out today or over the next couple of days. There you go. When it's slow, you could do a throwback stream to the jigsaw days. Hurt shoulder and all. Oh, yes, the hurt shoulder. Hurt shoulder days. Don't remind me. Yeah, I haven't got jigsaw at the moment. I'm here. I have got it, but I haven't got any connection. Because I'm not trading futures. The trouble with futures is it takes such a lot of hassle to set it up. You've got to get a data feed. You've got to get your jigsaw. You've got to get Rhythmic configured. It's just a ball ache. But yeah, I haven't got any jigsaw stuff. It's pretty much the same as trading this with a propulsion gap indicator. Yeah. There's an order block there. I'm pretty sure you'll find there's a volume bulge on your volume profile there. So buy it there. Pretty much the same thing, isn't it? It's all the same stuff. Million different ways to see the same thing. Oh, that's a lovely stop outlook on the S&P. Thanks for that. My break even on the second half of my position. Marvelous. You watch that fly to ADR now. Last time the Japanese intervened, it was a US bank holiday. Yeah. The trouble is they're not saying anything. You would hear it. There's no talk of intervention. It's not there. Look, the trouble is with you specifically, AZ, and what you're in. The US dollar yen is what they are measuring intervention against, and it's not rallying. It hasn't even got back to the high before the intervention. Yeah, it's pulled back, and it is a bullish wedge, but it's pulled back, but it's not going anywhere. The trouble is everything else is going somewhere. So you've got a weak US dollar against a weak yen, which goes nowhere. You've got a massively strong Swiss franc against a weak yen, which means it goes somewhere. So unfortunately, the one that you're in isn't the one that the Japanese are watching. They're watching the US dollar yen because that's where all their bonds are. That's what they're interested in. This thing going up there is bad. This thing going down there is good. If this thing goes nowhere, they're not happy, obviously, but they are not worried. So there's not going to be any talk of intervention while this thing doesn't go anywhere. Or rather, I should say, in the past, there never has been. But as we know, the past has a very different bearing on the future. I was talking about the intervention for days, for weeks, saying it's coming, it's coming, it's coming. And after I got out, it came. Yeah, I'm sitting here saying it won't happen because they're not saying anything, and it's all the typical patterns that happen from the Bank of Japan in the past that tell us it's coming have been there. They're not now. Doesn't mean it's not going to happen, does it? It could still happen. Definitely could still happen. I don't know. It's not going anywhere, is it, at the minute? It's still bullish. I mean, you've got a nice bull pattern forming for a breakout. We've got no news on the US dollar until Thursday afternoon when the unemployment, the unemployment, that's what data analysis all morning does to me. The unemployment claims come out on Thursday afternoon at 1:30. So that's when we have potentially got the next movement on the US after today's retail sales. So we're looking down here. But, you know, that will move the US. That could move the US. If they need to do something dramatic with the pound or the Swiss because of a change in interest rates or a change in stance or a change in any information, the US will get dumped or pumped to do whatever they need to do with these. So if you need to pull all your money out of the pound and out of the Swissy, you've got to stick it somewhere. Quite often you'll get it stuck in the US dollar. And likewise, if they need to do something in the opposite direction, you could pull it out of the US dollar because you need to pump it into these two. So it will move at any time. But that yen is dead at the moment still, as you can see by the Swissy and the Aussie today. Yeah. Any positive news, the yen is just getting rolled over. So if the US gets positive news, the yen will get rolled over. That's what you really want, AZ, is the US dollar to have a massive news spike of 300 ADR, because then the Japanese will be starting to think about doing it again, which will obviously help every yen pair come down. But at the moment, new highs going in. That is the all-time high now. Just gone there on the Aussie. Or going. It's also an ADR. So we will see. I've managed to pull the month back, by the way. So I'm back to break even. So we're only on the 18th of the month. Break even. I'll take that. So hopefully I can scrape 5%. It's going to be tough, but if I can get 3 or 5% out of the month, that'd be fantastic. After what months I've had of relate, but market's tanking again. Look, we're not going anywhere today, are we? We are totally stuck. Look at that. Awful range today. Stuck fast. I may have to take some losses on it. Yeah. Yeah, I mean, you need to decide where your comfort level is on it. Aussie dollar yen ADR. There you go. So that's your ADR hit on the Aussie yen. So with the Swiss, I mean, the trouble with when you're at an all-time high, there is nothing but ADR to measure with. So the only thing you have is ADR. We know what it does on average in a day. When it's beyond that, that's when you start to get exhausted. So, but your drawdown level is what's going to make the decision on when you shut stuff out. So that's really all you can do, is look at where your average is, look at how much drawdown you're in, and do drawdown control. And if it means doing drawdown control with no profit to use down here, it becomes loss. Nothing you can do. Like I did with the Aussie, with the US dollar yen. Yeah. So I did exactly the same thing. Yeah. I got out. I had to. It was just too far, too fast. Couldn't do anything with it. So I had to take it on the chin. You don't do it very often, but when you do, you have to do it. You can't just cross your fingers and go, it will come down at some point. 90% of currencies will come down at some point. That period there, for example, is June to November. 6 months. It didn't. It did actually. It did come down, but only to the 24. Yeah. So if you look at the Swiss yen, assume in a trend, you have to assume a strong trend is going to pull back no further than the 24. A medium trend is going to pull back no further than the 72. Yeah. So that's what we tend to respect on the daily time frames. Obviously, this is a 4-hour chart showing the daily MAs, but if your average is sitting here at the moment, by the time it starts to come down, this will have gone up further. You're not going to get to it. So you need to get that average up, and whatever you need to close out above the line to get that average far enough that you can actually hit it. I'm staying out, going nowhere. Hit my consistency target, good enough. There you go. Hit my consistency target. So many targets all the time, isn't there? Afternoon ago, sir. I haven't got a consistency target. Euro pound just coming up into potential resistance, but we've got that gap fill to do. So I'm holding for this gap fill now. Especially now, I'm holding for the gap fill because I've got $1,200 to get back today. My average is at the 200 ADR. Is at 200 ADR and 6% of drawdown. Oh, that's all right. Well, it's not all right, but it's not the end of the world. I mean, 200 ADR is achievable. Look, we've just done 150 ADR to the upside. So, you know, you can 200 ADR is there. Yeah. So if you plot into the future kind of a pullback, if it's going to bounce at the 24, you should be able to get out. Let's see. Right, I'll leave it there today. Anything else you need, let me know. I'll be in Telegram or Discord, but there's nothing much else to discuss today. We've got a fair bit of movement today, but it's all based on Aussie and Swiss today. So a lot of movement coming in. We've got a lot of news this week, but it's obviously today and yesterday were the days we weren't expecting masses of movement. Obviously, the Aussie we knew wasn't going to change. That one, though, we do not know about. That one we do not know about. And that one is going to definitely impact that one. So as of tomorrow morning, 7 a.m., all hell breaks loose. And then look at that for Friday, right? We got a triple witching or quadruple witching options expiry. Plus it's PMI day. Volume heaven. This is going to be a big, big, big day on Friday. There's going to be a hell of a lot of movement all over the place. It's going to be fun. So Friday, I'll be morning session. So Friday morning, 7:45, be trading the DAX. So yeah, just be very, very careful if you're trading Friday afternoon. Yeah. You can make a hell of a lot of money, but you know, forget elastic band theory. Go and look at some triple witching moves. Yeah, go and look at previous triple witching dates. Go and look at what happens in the stock market on those dates. Yeah, and what happens in FX on those dates. Yeah, you're not a mean reversion trader. You basically just shut your eyes, press the button in the direction the market's moving, and go away and come back in a couple of hours. Trust me, you'll be very happy. Yeah, there's 200, 300 ADRs all over the place. Stayed out of the first after the first intervention. Yes. Wasn't necessarily staying out after the first intervention. It was more knowing that if the intervention doesn't work, it just doesn't stop. Yeah, that's why I'm out of the yen at the moment. I would have happily longed it, but I didn't have the confidence to long it. But that's you have no way of knowing the future. That we didn't know if it was going to work or not. Now we know. But yeah, hindsight is a wonderful thing, isn't it? If we were hindsight traders, we'd all be billionaires, wouldn't we? Anyway, right, so I'll be back tomorrow at 8 o'clock. And we will have a look at the midweek analysis, go through all the FX pairs, see where everything is, see what's going on, have a look at what impact that has had on the pound. Yeah, and just go through all the FX pairs, normal analysis. And there's some very nice potential mean reversion opportunities out there today on these Swiss pairs. So just obviously be aware that it's the Swiss and it can do what the yen does. So be careful. All right, have a good one, and I'll be back tomorrow. If not, I'll be back on Thursday afternoon. Have a good day.